เขาจะเกริ่นก่อน
Good afternoon, investor and corporate. Welcome to SET Digital Roadshow Q1 2021 Performance Review. This session will run about 45 minutes. After the presentation, should you have any question, you can send to IR company email. May I now invite PTT Exploration and Production Public Company Limited to start the presentation, please.
Thank you very much, and good afternoon, all the investors, and thank you for your joining us today. My name is Thanat. I'm the Investor Relations Manager for PTTEP, and today with me I have Kun Arachon, who is a Senior Vice President for Finance Division, joining us as well.
Good afternoon.
So in today's session, we go through our presentation and then followed by a Q&A session. First, just a brief introduction of the company for the sake of the new investors. So as a quick corporate overview, PTTEP is the largest oil and gas producer in Thailand. We are listed in the Stock Exchange of Thailand with the market capitalization over 15 billion US dollar. Please go to slide number 4. We are majorly owned by the national company PTT at 65%. And our strategic area focus on the Southeast Asia and Middle East, with our sales volume from this region over 90%. Despite tough economic situation caused by this pandemic, we maintain our credit ratings from S&P at BBB+ and Baa1 from Moody's, and local rating agency TRIS at AAA. We are also listed in the Dow Jones Sustainability Index, as well as Thailand Sustainability Index and FTSE4Good Index for multiple years, and this proves our sustainability way to do our business. So as a start, I would like to invite Kun Arachon to give you a brief highlights of the first quarter of 2021.
Yes, for the highlight and key achievement in the first quarter, let's start with net income. Our net income was reported at 300 $76 million, increasing by 10% compared to the same quarter of last year. This is mainly contributed by three factors. The first one was higher sales gas volume as a result of higher demand and new contribution from Sabah Head first gas in the early of February and the completion of acquisition of Oman Block 61 on the 23rd of March. Looking forward, we expect to see our sale volume should reach 400 KOBD level of this year. The second was the unit cost. The lower unit cost that we were able to control over unit cost from $30 per barrel to $27.96 per barrel. And on the longer term, we anticipate to reduce our unit cost further to $25 per barrel by 2030. The last was increasing in non-recurring net income, mainly from acquiring Oman Block 61 at the price lower than the fair value, leading to margin of $350 million. And for the activity highlight in the first quarter, we have been successful with our exploration activity with multiple discovery in Malaysia. This will further explain throughout the section, but in a nutshell, we had two new petroleum discoveries at SK417 Dokong and SK405B Silong. In addition, the FPSO well result of Langlaba has proven to have high potential with more production capacity up to 1,000 KOBD, confirming our largest discovery. Nevertheless, we have three major projects to monitor. The first project is the transition of G1 or L1 field, whereby the access to the area still no clarity, as the negotiation between the current concessionaire and the government has not yet come to an agreement. We are evaluating the impact and preparing remediation plan to compensate potential shortfall volume from other operating projects. The second is our projects in Myanmar. With the current situation in Myanmar, our operation remains normal. We have implemented the business continuity plan and still adhere to our commitment and contractual obligation while ensuring stability in the country. Lastly, with the regard of security situation in Mozambique, total, the operator has evacuated all project staff and contractors from the site and handed the site to be under care of the Mozambique government. The force majeure has been declared by the operator for the safety reason. So the situation at the site is being investigated and monitored closely. That's all the highlights and key achievements of the first quarter. May Khun Thanat will go to the.
Thank you, Khun Arashan. On the next section, I have a brief update on the industry outlook. On the left-hand side, the chart is Brent and Dubai oil price movement. So you can see that Dubai has climbed up gradually to $60 per barrel level in the first quarter of this year, and now hovering around $70 per barrel, following the increasing energy demand as a result of higher vaccination rate in many countries. Though the consensus of oil price in this year would be in the range of $60 to $70 per barrel, we maintain our assumption of around $55 for now, given various factors such as the OPEC Plus production cut policy, the potential supply increase from the change in the U.S. sanction policy towards Iran and Venezuela. The company is closely monitoring the situation on this. On the right-hand side is LNG price. It has skyrocketed in the first quarter from the abnormal cold weather and high demand, as well as short supply in certain areas. But now the price has come back to a normal level of around $6 to $7 per MMBTU. And we expect it to stay at this level throughout the year, as LNG market globally is still in the oversupply condition. Next part on the gas liberalization in Thailand. On the April 1st of this year, the Energy Policy and Planning Office has endorsed the second phase of the gas market liberalization in Thailand by opening for private sector to import and distribute LNG as cheaper, including investment in the LNG terminal. So we are classifying this into first one, the existing market, also called the old supply, which will be handled by PTT as it distributes LNG to the customer as per the existing contracts, including the supply portion from the Malaysia-Thailand Joint Development Area, Myanmar, and its LNG import quota as well. Therefore, the gas from the Gulf of Thailand is given the first priority to enter the gas separation plants, while any LNG import portion will have to consider the take-or-pay obligation first in order to minimize the cost impact to the local electricity costs. Therefore, the company foresee minimal impact to PTTEP in this part. For the new market, also called the new supply, there would be opportunity for new shippers as they can now apply for the license and import LNG to supply, but will be limited to the on-grid and off-grid power plants and also industry use. PTTEP will also compensate in this new supply area as well through PTTGL, a joint venture company with PTT, and we already applied the license, and it's now being under consideration by the respective government bodies, and we expect to see the results within the second quarter. Next, I have the operation update. As Kun Arachon already mentioned in the highlights, the Block H project in Malaysia already started early in the February, and we are ramping up the gas volume from this project right now. So the sales volume contribution from this project is expected at 15 kBOED for this year and 20 kBOED in next year. For the Oman Block 61, that we fulfill all the conditions of the agreement and already received the royal decree from the Sultanate of Oman. Therefore, the sales volume contribution in the first quarter was recognized for about 9 days. The sales volume for this year is expected at 29 kBOED and next year around 50 to 52 kBOED. On the exploration project, the important one would be the SK412 Langlaba, as the result of the appraisal turned out to be better than our previous estimation. And the field is now regarded as the company's biggest discovery. The development plan for this area is being considered by the Malaysian government, and we expect to develop of up to 800 to 1,000 million scf per day with the FID plan in next year. For the G1 transition progress, we still cannot access the site, and this has impact to our production plan. We are, of course, in discussion with the government on how we can resolve the situation and enter the site. We are also assessing the impact and also developing a remediation plan to increase production volume from our other existing fields to compensate for any shortfall from Erawan. Regarding the penalty for not able to produce up to the PSC commitment, This is also under discussion with the government, and we will share more results in the near future. For the transition of G2, this is on track. Next, I would like to have an update on the new business. The first one is the Myanmar Gas to Power project. This is a $2 billion US investment during 2020 to 2025. It includes the development of the upstream M3 and investment in the pipeline both onshore and offshore, connecting to a power plant with a size capacity of 600 megawatt gas-fired and connect to the national grid of Myanmar. 100% of the electricity will be sold to Myanmar national grid. The project will supply approximately 10% of Myanmar electricity supply. This is also under the long-term contract of up to 20 years plus 5-year extension from the first commercial date. The project is in the early preparation stage at the moment. We are conducting preparation regarding engineering work, financial planning, and also negotiating related commercial contracts. For M3 field development plan, this is already approved by MOGE in April this year. Given the situation in Myanmar and COVID-19, some work could be delayed. For example, a site survey in the local area. However, at this time, companies still maintain FID plan at 2022 and COD plan in late 2025. Next is the update on the technology front, the AI and robotics business, which we now finalized its business lines into 4 areas. The first one is Robula, where it will provide services for subsea inspection and maintenance using automated robots. The second one is Varuna. It will provide services for the inspection or platform analysis, mainly used in the agricultural business, including sprayer drone. The third one is Scaler. It will provide asset inspection services using drones such as pipelines or telecom poles. And the last one is Health Tech, where it will provide services related to healthcare and medicine, such as disinfection robot. In terms of the market scale up, we have initially launched and provide services within group companies like PTT and IRPC, and we will expand further to partners, for example, Thaicom, Mubadala, and other private companies. We continue to introduce our product and service in the trade fair and exhibition in order to attract new potential customers across sectors, such as electronics, food and beverages, as well as hospitals. ARV now is in the initial stage. The revenue is still immaterial for now, but the company hopes to grow this in the near future. And together with the power business that I just mentioned, this would contribute a non-E&P revenue to PTTEP in the coming years. Next, I would like Khun Arachon to help with the update of the financial results for the first quarter.
Yes, for the financial result for the first quarter, the net income of the first quarter of this year. Okay, wait a minute. We just wait for the slide.
I do know.
Hello.
Can you hear us?
Yes,ค่ะ.
Oh, okay. Yeah. Can you see the slide?
Yes,ค่ะ.
Maybe on ต่อเลยครับ
So I will go on. The net income of the first quarter of this year increased by nearly $300 million from 81 million US dollar in the fourth quarter of last year to 376 million US dollar in the first quarter of this year. Out of which was the increasing in core profit about 114 million US dollar, mainly from higher liquid price following to the recent price recovery, as well as the additional volume from completion of Oman Block 61 acquisition on the 23rd of March, together with the first gas of Sabah in the early of February. The sale volume of these two assets has started to contribute in this quarter. The volume of Oman 61 is around 3 KOBD. For the extraordinary net income also lost significantly 181 million US dollar on the recognition of a gain from bargain purchase Oman Block 51 of 350 million US dollar because of the acquired payout was lower than the fair value market of the asset. On a year-on-year perspective, the net income increased from 275 million US dollar in the first quarter of last year to 376 million US dollar in the first quarter. But the recurring net income decreased by 8 million US dollar, mainly due to the higher gas price in the first quarter of last year, consequently leading to the lower selling price of 10%, despite higher sale volume in the first quarter of this year. While the non-recurring net income share the same scenario for the quarterly update, giving the additional extraordinary net income of 100 million US dollar. The next slide shall provide the detailed breakdown of sale volume and average selling price. For the sale volume in the first quarter of this year is around 383 million KOBD, with the weighted average sale price of 40.38 US dollar per barrel, increasing by 10% Q on Q and decreasing by 10% year on year. The higher average selling price Q on Q was mainly from the result of rising liquid price, while gas price remained flat. Gas price was 5.63 and 5.61 US dollar per barrel in the fourth quarter of last year and in the first quarter of this year, respectively. Gas price was a little bit lower in the first quarter because the acquisition of Oman Block 61 and Sabah, which have a slightly lower gas price compared to the overall portfolio. For year-on-year perspective, the weighted average selling price in the first quarter of last year was 44.81 US dollar per barrel, decreasing by 10% to 40.38 US dollar per barrel in the first quarter of this year, despite the increasing in oil price from $50 per barrel in the first quarter of last year to 50 US dollar per barrel in the first quarter of this year. But the major determinant is gas price, which stood at 6.67 US dollar per MMBtu in the first quarter of last year, decreasing to 5.61 US dollar per MMBtu in the first quarter of this year, leading to the lower average selling price. For the volume mix between gas and liquid in the first quarter of this year is 21% and 29% respectively, which is in the normal range. While the fourth quarter of last year, the liquid sales were quite high. For the unit cost, for the unit cost has decreased Q on Q from 31.09 US dollar per barrel in the fourth quarter of last year to 27.96 dollar per barrel in the first quarter of this year, mainly from the reduction in OPEC from 6.67 US dollar per barrel in the fourth quarter to 5.06 US dollar per barrel in the first quarter. Because the unit cost of oil loading in Malaysia is quite high, The OPEX in the fourth quarter of last year was subsequently high due to higher sale volume of Malaysia projects in the fourth quarter of last year than in the first quarter of this year. For year-on-year front, the OPEX also decreased from lower maintenance and exploration activity, and there was an asset write-off for Sautica project in the first quarter of last year. Moving to the cash flow and financial position. Next slide, please. Okay. For the cash flow, the beginning cash in the early of the first quarter of this year stood approximately $3.8 billion, and for this quarter, the cash flow from operations still robust at $800 million, net of with the Oman Block 61 acquisition of $2,364 million and other expenses such as CapEx, leading to an ending cash of $1.8 billion. With that, our total assets increased from $22.4 billion in the fourth quarter of last year to $23.3 billion in the first quarter of this year, mainly from the acquisition of Oman Block 61, which was higher in asset value compared to the cash disposed of acquiring it, together with higher profit, all in all, leading to higher assets. For shareholder equity also increased as a result of net profit realized in the first quarter of this year. And the DE ratio in the first quarter was reported at 0.32 times, given the policy of 0.5 times, as we used our cash on hand to pay for acquisition of Oman Block 61, so that our DE ratio was remained in the acceptable level. For the average cost of debt was around 3.44%, with no debt service obligation within this year. The last slide will provide the financial outlook into the second quarter of this year. While the average sale volume in the first quarter of this year was 383 KOPD, with additional of Oman Block 61 towards the end of the quarter, along with Sabah hedge. The sale volume guidance for the second quarter of this year is approximately 416 KOPD, assuming full quarter contribution from Oman Block 61 and Sabah hedge. However, we projected the whole year guidance to be 405 KOPD due to the potentially lower guidance of gas nomination from PTT in the third and the fourth quarter, coupled with the maintenance shutdown in those quarters. For gas price, the average gas price in the first quarter of this year was $5.61 per MMBTU. The guidance for the second quarter is $5.8 per MMBTU. Due to the lag time of Bongkot project gas sale adjustment in April, with recovery of oil price during the second half of last year. Hence, fuel oil price in the second half of this year will be higher, providing an explanation for higher gas price projection for the second quarter of this year. However, the full year gas average projection is $5.6 per MMBTU, mainly due to the lower gas price from Oman Block 61 and Sabah hedge. Besides, the average gas price in the fourth quarter of this year is likely to be low due to price adjustment for the certain projects. The unit cost projection for the second quarter of this year and the rest of the year is around $28 to $29 per barrel, while EBITDA margin in the first quarter of this year was reported as 74%. But within the current oil gas price outlook, the full year EBITDA margin projection is likely to be about 70 to 72%. That's all for the financial part. Thank you.
Thank you, Khun Arachon. So the company has completed the presentation. So if the investor has any questions, please feel free to answer or type in the chat box. Thank you.
Okay, so the session has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day.